Good morning, good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Back with his good friend Taylor from Life Goal Investments. How you doing, buddy?
I'm doing great. Thanks so much for having me. This is always a pleasure. You're a treat to talk to.
I have a great time, man. I appreciate you. Thank for doing this. What we're gonna do in video 3 is we're going to talk about scary bear market stats that we have been reading about recently. I think it's fair to say that we are in a bear market. I know the S&P tripped it on Friday, but did not close below. I think it's realistic to think that we will see a bear market in the S&P. We already are in the NASDAQ. But I just want to talk about just some crazy headlines that we have read about bear markets because I've done some reading recently. You're the guest, so I'll let you go first.
Yeah. So just looking at long-term bear markets, the average drawdown from the peak of all bear markets since World War II is 38%. If you take out 3 really tough ones, which are 74, 75, that was bad.
Yeah.
2000 to 2002, and then 2007 to 2009, it's 31%. So I don't know that we're looking at more one of those two camps. I would think that it's more like the latter, more that minus 31%. But you have an interesting point is once the bear market is entered, so once you've tripped that 20%, what people don't realize is the length of time it takes for the market to actually bottom. It's tough. It's 258 days on average.
I want to repeat that. So again, this is not 8 months peak to trough, which everybody's like,
correct.
Awesome. We're 6 months in. The bottom is near. You're like,
we're almost back out.
Yeah, you're almost out. You're like, no, dude, it's 8 months once we hit the bear market. That's what you're saying.
Correct. Correct. Yes. So once you hit that 20%, it's 8 months before the market finds its bottom.
Oh my God.
So that's where you start to feel your skin crawl a little bit.
Exactly.
And say, we're not there yet. Are we ready for 8 months of more downside before we get there? Yikes. That's tough. And I think to your point and what we discuss a lot is a lot of the newer money that entered the market, especially over the last couple of years, is certainly not ready for that. But we both agree, interestingly, and I only know this from prior conversations, that we also don't feel like they're out yet.
No, they're not out yet.
Like there's not a massive sell push.
Everywhere I read, people are still preaching buy the dip, dollar cost average, all of these things. So until I see posts about I'm out, I give up, it's rigged, nobody can win. We don't have a bottom. One of the scariest stats, Taylor, that I read recently, it's probably based on the same data, just sliced differently, is bear market with or without a recession.
Okay.
This is interesting. Because if you have a bear market without a recession, the average drawdown peak to trough is something like 23%. So basically just over a bear market.
Yep.
Bear market with a recession, 48%. So now I have to ask, do you think we're in a bear market with a recession or are we in a bear market without a recession? Because that's a very different.
I will tell you what we're not. We're not in a 2020 recession.
No,
the bear market drifted.
No, we're not.
21%, and then we rallied out of the other side of that.
That
45 minutes
recovery.
later.
Yeah, exactly. 45 minutes.
Again, but to their point of like the newer people entering the market, like that's not a normal recession recovery. That's like the ultimate V-shaped.
Taylor, don't pop my bubble, man. Come on. It's going to come back tomorrow. It's there. It has to.
No, you know where I sit in this camp, and that's the fact that we both feel that a recession's coming. You've been as boisterous in this camp as anyone has, to your credit, because I think people are coming more in your direction of. So and here's evidence of this, by the way. So bonds have not held up this year.
No.
So bonds are down. I'll just call it rough numbers, 10% on the Barclays Ag, the broad bond market index. And when you look at treasuries, they've been absolutely smoked because inflation, the Fed raises rates, it beats up bonds on the other side. But the story has been inflation until last week or 2 weeks ago. 2 weeks ago, you started to see bond prices start to rally. And that's where the market's going, oh boy, when do you buy bonds, and especially high quality bonds, when a recession's coming? And that's been a big paradox.
Yeah, it's funny. The 10-year peak, the highest I saw was 3.15. This morning, I think I saw it as like 2.82. That is a
I think it's at 25 right now. Yep.
Yeah, that's a crazy, I don't know, I'll call it drop in, I don't know, 3 weeks, 4 weeks.
Yeah, I think it was actually 2 weeks ago. 2 weeks ago was when that 10-year tipped.
So I poked at that a little bit because again, anytime that's deviations outside the norm, it catches my attention.
Yep.
And I had to ask myself why. So one of them could absolutely be the recession. Consumer is weak, hence Friday's discussion earlier. Actually, and I'd love your opinion. I think this goes back to something you brought up a month ago. Foreign money. I think people in China, people in Europe, I think there's a lot of, I'll call it right now, Europe's in a recession.
Oh yeah.
You're in a recession.
All of China the things that are going on there are scarier than they are here. The war is
totally
disproportionately affecting them. And it's like a real economic scare. That is an absolute exogenous event to them. I'll say this, and I don't mean to come off brash and not caring about humanitarian. It's not that big of an economic deal here in the United States versus what it is in Europe. It's scary for them.
Yeah. So I think what, again, could it be a recession fear? Absolutely. I think it's that plus I think there's a lot of fear in Europe. And let's be clear. I think China's in a recession. I don't think they'll ever show those numbers. Property values or, property industry is 30% of their GDP, and there's no chance that's going anywhere. And if you got people at Starbucks and Nike cutting back, of course it's not going well.
Yeah. I mean, when you look at the IMF, which is this big global institution, and they say without hesitation that we're cutting global GDP forecasts. Like you can't go, okay, the US is going to continue to grow and they're going to continue to grow and they're going to continue to grow and they're going to, someone's got to be moving the opposite direction. Right.
Yeah.
And maybe across the board, we're moving in the opposite direction at different rates. Don't get us wrong there. But that's the thing is to your point, losing my train of thought a little bit here, but yes, Europe is absolutely slowing. The energy crisis is massive there for them. And they are, especially Germany, which is the biggest portion of the European Union. They are a huge manufacturing behemoth. And what is the biggest input cost for them? It's energy. It's oil. And this is really tough on them as they try to wean themselves off of the Russian influx of oil that they've always been,
The other thing I wanted to talk to you this week, because you're my Wall Street guy, is the dollar has shown amazing strength.
Because inflation, the dollar is both strengthening and weakening.
Purchasing power versus comparison to other currencies.
So you're right.
Yeah. So again, the dollar, and again, why is this important for Wall Street? I believe again, I've been doing this a long time. I think the next 90 days is going to be pre-announcement season. I think there's going to be plenty of pre-announcements. And some of them are going to be multinational companies who are going to blame the dollar.
Yep.
Right? The dollar
and
is so strong.
For context, people do that when there's something off, when there's something amiss. They'll pre-announce and say, hey, for your warning, this is going to change. And the market will react then, but it might react a little less than if they waited to the quarter end when they normally report.
When they surprise them. Yeah. Exactly.
But you're so right. So what happens with, and this is stating the obvious, but I'll say it out loud anyway. What happens when the dollar strengthens is that all the multinational companies that export goods overseas, they have then a much more expensive product that they have to sell because they sell it in US dollar terms, right? And as they sell it to a weaker currency, they get less money in exchange for it.
Correct. Yeah.
Put that perfectly.
No, but their earnings will be hit.
The buyer of it can't afford to buy as much because it's so much more expensive because it's based in US dollars.
Yeah.
Is what's going on there.
And again, I don't think I read, I don't know, a dozen earnings reports, and I went specifically to the companies I thought that would talk about it, and nobody is talking about it. That is coming.
Yes. And it is the easiest single thing for a CEO to go, this is what happened. And it's not my fault. It's not the company's fault. It's not the brand's fault. It's nothing. It's a macro event that we can't control. Don't blame us.
It's coming. Yeah.
It is.
And then the consumer is weaker than I expect. Again, I think Europe's in a recession. I think Asia is in a recession, at least the larger countries. And I think the US survives this year with stagflation, but has a recession next year. So I think the next 2 years we have, and the stock market collapsing multiples, and what hasn't happened yet is earnings cuts. And I think that's what's coming. So what do you think?
Yeah. I totally agree with you. And I have again, a slightly weaker outlook on our economy. I think that, and we discuss this a lot, that the Fed isn't going to be able to raise rates as quickly because I think they break the economy before they do so. And I think that the recession, in hindsight, will be entered this year. Now, that is an unpopular opinion, not just because people don't want to hear it, but it's an unpopular opinion because it's against consensus.
No, I
totally right now,
agree.
Consensus shows about a 20% chance, somewhere in that ballpark. And I just, every lagging economic indicator right now is pretty darn good.
Yeah.
Every leading economic indicator, stock market. So let's look at these real quick. Leading or lagging economic indicators: GDP minus the last print being negative because of some accounting things. It's been pretty good. So we'll call that a positive to neutral. Income and wages, still good. Unemployment, good.
Really good.
CPI, good. CPI is when it's high, it's good. That's what it gets at here. So that's strength. Currency strength, just talked about that. Corporate profits, still relatively good.
Yeah,
those
shocking.
are all the lagging indicators.
Correct.
Now let's talk about the leading indicators. Stock market, not good. Manufacturing. Manufacturing actually just saw a decent print, but I think a lot of that has to do with probably the bottlenecks and the resupply of all that. So call that one positive. That's fine. Inventory levels. Inventories are building. That's not good.
Not good.
Retail sales still show positive. I think some of that has to do with an inflationary effect of people buying the same amount of goods that are more expensive. So it shows retail
absolutely. I think they were 8.7. You back out inflation. They were still positive, but it's not as good. Yes.
Correct. And then building permits, neutral. They've moved sideways. Housing market, you would be better to answer this than me.
I think the housing market is slowing down.
Okay. And then new business formation is not good. New business formation has rolled over the last 4 months. So it's like, again, we are the bearer of bad news. We've been talking negatively about the economy now for, however long you and I have been discussing, but also longer than that. But it's like, we don't want to be the pessimists. We're looking at the data.
This is about being prepared. I want people to hear this. So again, what I believe happens, so in bull markets, assets inflate. Right? Talk about PEs. They went to 26 or 28, several deviations above average. Once risk goes repriced, they will come in and they will come below trend, right? They'll go to 8 or 9. You buy companies with PEs of 8 or 9, and all they do is go from 8 to 12, 50%. Nothing happens other than we go back to neutral. So life-changing wealth will be made by the people that prepare and get shopping lists ready. As we were saying in this discussion, we're still probably 8 months away from a bottom. A bottom is ugly. It's exhausting. They die of old age. But again, I think a lot of people who watch our channel and get prepared will make amazing investments. That's what
I totally agree. From your real estate investment side, I mean, you guys are just pumping out awesome content. I always say this about the market. It's not about definitive answers. Are things positive or negative? It's about the rate of change.
Correct.
So it's the rate of change of things like unemployment, the rate of change of things like consumer behavior. So if the consumers starting to spend more, and all of a sudden they slow down that spending more, it hasn't gone negative, but it's the rate of change that's indicating what's likely to come. And that's where you need to start to pay attention to, is not, again, is this a good number or bad number? Is it a good number or bad number? Where are we coming from? And what does it allude to the direction of us going?
Yeah, and that's why June 10th is going to be a big deal. It could be
again I was just going to say,
either way.
Exactly why you brought up inflation.
Exactly
right.
Well, this is a lot of fun. I think we have 2 more conversations before June 10th. It's going to be interesting.
We'll battle again.
Yeah, we actually might want to have a discussion on June 10th. June 10th must be a Wednesday, I think. I don't know.
Yeah, that's usually what they are. Yeah.
Yeah. Anyways.
No, it's not. No, it's not. Because I know the 15th is a Wednesday for something else. June 10th is actually a Friday.
All right. So we may have to just talk Friday. We'll just sneak in a conversation.
Friday fun day.
There you go. Hey, Taylor, where can people find you?
Yeah, find us at Life Goal Investments on Instagram. Daily content there. So
there you go.
At Life Goal Investments.
Thanks, buddy. Take care.
You're the man, Michael.